Hello, everybody. Welcome to episode Bitcoin Gold, number 20 of Barstool Bitcoin. Say hello to producer Kraser. How are you, bud?
Bada boom, bada bing. Realest guy in the room. How you doing, motherfuckers? Great to be back on the pod, ladies and gentlemen. Have you back for the 20th episode. That's fantastic, Dan. Just flying by here. Just wanted to let our listeners know that stay tuned to the end. We have a really, really good interview with a very interesting man. His name is Daniel Ameli. He's been in Bitcoin since 2010, so pretty much a year after it was out. And he is a miner, investor, and a trader. So stay tuned for a really, really good interview with some good notes and tips and tricks with Dan Ameli. Now, let's move to the fun stuff here, Dan. So let's take a look at our over-under from last week. And I think, actually, don't want to rub it in here, but I took the under, it took a dump, and you went for the over, and you took a dump because you got it wrong. But that's all in the past now. What are we looking at this week? What's your predictions?
Yeah, there was a bit of a flash crash, so we tipped down, now trading around 5,400. I've been predicting 5K for a long time. I did get the last prediction wrong here, but I have been predicting this for a little while here. With Bitcoin right now, I don't think there's just not enough price action to determine the next move. I think it's possible that we could see a bit of, like, this looks like a liquidity grab to me, so I do think that we're gonna go up. There is a possibility that we will go down slightly further, maybe to 4,800 or 5K range, like 5,000 even. But I'm gonna take the over for next week, so I say over 5,400.
Okay, Dan, so I jotted you down here on the over, signed, sealed, and delivered. No going back on that one. I'm actually going to go with the under. I think, from what you just said, I honestly think it's going to probably drop down to around the 5K. So that's my prediction. So, ladies and gentlemen, stay tuned for that and see if I can one-up Dan again next week.
Yeah, doubt
What
it,
do we?
but we'll see. We'll see where things go.
Whoa. We'll see there, tough guy. Okay, let's get into the stories. Let's jump right into it. What's going on in the world of crypto, Dan?
Yeah, well, yesterday there was a pretty big bloodbath, and the market kind of continued dipping today. Bitcoin below the 5,400 mark, and we lost. I think we got down as low as 174 billion total market cap. So we did lose some significant money out of the marketplace. We saw a pretty large dive. There was a Bitcoin Cash fork today. So you know what they say, buy the rumor, sell the news. And they did do their fork, and some miners moved over to Bitcoin Cash fork, I'm sure. But I mean, the good news is this recent dive has marked a new volatility record for markets this whole year, which is pretty crazy. It hasn't been so volatile this year. We've seen a lot healthier price ranges, and the Bitcoin volatility rate has just recently exceeded the index of 7 for the first time since April this year. So we do have most of the top market cap coins seeing losses, and most of them around 5%, some up higher around 10%. And we did see Ripple eclipse Ethereum as the second largest market cap cryptocurrency at the time we're recording this. So we'll see what happens from here. Bitcoin is continuing its downward trend right now, but I think we could see a move up, and we could enter a long position here soon if this is just a liquidity grab, but it's a little too early to say here.
What do you think, like any reasons for it, why it's been taking a little bit of a dump lately? Do you have any hypothesis, or what's your theory on that?
There's a number of reasons, really, that could have caused this. It could be from the Bitcoin Cash fork. It could be a large whale selling off it could be Wall Street just pushing the price further down to collect cheaper Bitcoin and push out some of these large long positions. Really, I don't know. I'm not going to speculate on that. I don't know enough to say what caused the sell off, but all I know is I've been calling Bitcoin at 5K for a couple months now, and finally we see it.
So do you think, maybe I'll ask you a different question. Do you think now would be a good time to start getting into it, like, or buying a little bit more Bitcoin? Or do you think like it might drop a bit more, or should they hop in at this point?
Well, I think we've been in accumulation phase for a number of months now. It's definitely a good time to buy Bitcoin. We're in a good correction phase where you can safely buy Bitcoin and aggregate the price that you get in at. So if it does drop further, you could buy again. So I wouldn't, blow your whole wad on this first buy. If this is your first buy right now at this price, I would tier in your buys. And that way you're covered. If Bitcoin does slump further, you can aggregate the price of you could aggregate the price you bought in Bitcoin at. And I mean, there's a lot of speculation going on right now that Bitcoin, this so-called breakdown, this crash is going to take weeks, maybe even months to rebound. There was a Fundstrat analyst who said that it's going to take at least weeks, if not months, to repair the technical damage caused by the recent collapse. I mean, I think this prediction is pretty sound. Like, we could sit in this range for a little while longer. It could definitely be a Black Christmas for Bitcoin. But overall, long term, this is healthy for Bitcoin to move this low. And I think it's just a liquidity grab for large institutions buying up cheap Bitcoin.
So no reason to panic, pretty much, is what you're saying. Just you gotta hang on steady and then ride the wave upward.
Yeah, exactly. I mean, the stock market is down also.
Yeah, I've noticed as well too.
Yeah, so this is just the trend in the marketplace right now. It's nothing to cause concern.
Well, that's good to hear, because you're right. It's probably just like normal. This is what happens with the markets. So just be aware, be patient.
In other news, though, there was some dude in the U.S. who got fined $1.1 million, and he got sentenced to 15 months in jail for fraudulent Bitcoin and Litecoin schemes. We like to talk about the scams on here because it's important to notice the common threads that they have so that you can avoid falling prey to these scammers. But this guy is a U.S. citizen, Joseph Kim of Phoenix, Arizona. He was fined $1.1 million and sentenced to 15 months in jail for misappropriating Bitcoin and Litecoin from several people. And the CFTC reported that he had defrauded his employer, which was a Chicago-based trading firm, and transferred around $601,000 worth of Bitcoin and Litecoin to his own accounts in 2017. And then when he was questioned about the crypto, he claimed that security issues made him transfer the digital currencies to several accounts. But obviously, shortly after, they discovered the misappropriation of funds, and Kim was fired. Everything's on the blockchain here. There's no way that there's no way that they could not track the flow of the funds. So after that unfolded, he defrauded private investors in order to return these funds to his employer. He lured he lured around $550K worth of crypto from 5 different people by stating that he had left the company voluntarily to start his own trading company. And he later lost all the investors' funds by betting big on something pretty risky. So he didn't do too well, and I mean, he was punished pretty heavily. I would say maybe slightly
That's
leniently,
what
like 15 months, not that long, and they should have set a
that
stronger
works, man.
precedent, I think. But I mean, the SEC charged this guy,
Like,
so
well, excuse my language, but what a fucking idiot, man. He basically sounds. He tried to cover up a lie with a lie, and then raise all in, and then he got busted.
yeah,
So it's not, like you're right. It's kind of a small sentence, but it's good to see that someone who, like, defrauded and did something wrong in the Bitcoin, and and the price for it. So these fraudsters are going to get what they have coming to them, and we're going to keep sharing these stories. So we do not want our listeners to ever happen anything like this with some guy came trying to steal your money. Anyways,
yeah,
that's just my two
definitely.
cents.
And to close things out here, to keep things positive, two pieces of news. The first one is slightly humorous. It's the European Central Bank, an executive from the European Central Bank calling Bitcoin the evil spawn of the financial crisis. And this
Ooh.
is this is so funny because these bankers are constantly creating this FUD for the marketplace so that they can buy cheaper Bitcoin. And I mean, we have these large institutions paying these essentially financial role models, people who tell you to buy gold when the price of gold is about to crash so that the big money can sell off their gold. These people are paying these execs to come out with these statements, and the banks are paying these execs to come out with these statements so that they can get cheaper Bitcoin. So I mean, don't listen to any of this stuff. Like, this is just complete FUD being created here. And whenever I see these bankers saying stuff like that, my first instinct is to go against them because they are marketing to the masses and they're creating the market for the market conditions for themselves. So that's their main motivation here. Their main motivation is money. They are inherently greedy. So you know what Warren Buffett said? Be fearful when people are greedy and be greedy when people are fearful. And that's what they're doing here. They're pushing the price down. They're suppressing the price of Bitcoin so they can buy more cheap Bitcoin. But on another note, Tim Draper stands by his Bitcoin price prediction of 250K in 2022. And Tim Draper is a fairly well-known venture capitalist. He's a authority in the Bitcoin investment space, and he famously predicted that the Bitcoin price will reach 250K by 2022 during a discussion at this large Web Summit conference. And he initially predicted it would happen in April of this year, but he then retracted that statement and said it would take around 4 years and reach 250K in 2022. So that is good news. There's just more reinforcement not to panic here at these price levels, and to just hold your water here, manage your emotions, and stick through this market.
That would be absolutely fantastic. I hope Tim is right with his prediction because imagine 250K for one coin. One fucking coin.
Well,
That's
we're
insane.
not financial advisors, and these are just predictions, but I wholeheartedly believe that we will see Bitcoin over 250K in the near future, in the next 5 years. So stick through this, boys. This is just part of the roller coaster ride that we're all going on. We're the early adopters. We're still so far away from real money coming into the marketplace, and the fact that we continue to see healthy levels of Bitcoin is very good sign. Bitcoin is going nowhere. The technology is going to be highly adopted, and in my opinion, it will be a winner-take-all market where all of these altcoins are basically phased out, save for a few of them, and Bitcoin takes the majority of the total market cap, and that would really push Bitcoin to record levels. That would create immense scarcity of Bitcoin, and the supply and demand ratio would force Bitcoin to, I mean, just really crazy levels to think about right now when Bitcoin is sitting at 5K. So don't worry, boys. And without further ado, we will bring you to our interview with Daniel Ameli. He's been involved in Bitcoin since 2010, 1 year after Bitcoin was created, and it was a really great call. He was very candid and shared a lot of good insight. So enjoy the interview, and we'll see you next week, boys. Hey everyone, welcome to the show today. We have an exciting interview with Daniel Ameli. Daniel is a data scientist with a BA in economics from NYU, an MBA from Hult International Business School. He's worked in futures, options, and derivatives in traditional financial markets and has a background in math, science, and computers. Daniel has been involved in Bitcoin since 2010 as a miner, investor, and trader. He has developed automated trading systems, valuation models, and arbitrage strategies in the space. Daniel's knowledgeable about information security, market structure, databases, exchanges, regulations, consensus protocols, game theory, memory pool, fee structure, cryptography, hashing functions, and important notable events, people, and companies in the cryptocurrency space. Daniel currently advises crypto startups and has been kind enough to hop on the show today. Welcome to the show, Daniel. Very happy to have someone as technical as you on Barstool Bitcoin.
Thanks. Glad to be here. So your name's Daniel also. It's great.
Yes, we have that in common. It'll be easy to remember for both of us. So how did you first get involved in Bitcoin in 2010?
I happened to hear about it on a tech blog. I wish I had been on the early mailing list where they were discussing it. And it immediately grabbed my interest because there were several other kind of projects, ideas that Bitcoin is building on. I was already interested in things like SETI, the Search for Extraterrestrial Intelligence, which is this distributed computing project to look, analyze all this data to try to find signals from aliens trying to communicate with us. And then with Bitcoin, they're saying, oh, hey, you can run this program on your computer, and it's building a new form of money. It's the cash on the internet, which has been an unsolved problem for a very long time. There's a code 402 on the web, the payment protocol, and there was never any real implementation of that. But people knew, you needed to have digital money, and how could you do it? So when I first saw that, I thought, okay, this is neat. Although I didn't fully see, how this would grow into this massive ecosystem now. But it was great to start learning about it at that point, even though there was a long period of time before I could have a real discussion about Bitcoin with people I knew.
Yeah, I think a lot of people got in at different stages in the market. A lot of people are still on the outside looking in, and none of us really imagined how far it would come in just a short 10 years. Now, did you start mining in 2010, or was that later on?
Yeah, because at the time, it really was just run a program on your computer and then hope you got some blocks. And back then, blocks were 50 Bitcoins each.
Wow. Yeah. Significantly different nowadays.
Yeah, that was before before the mining pools, before, customized hardware, before everything. It's changed so dramatically. There was no mobile wallet, and there was no high security hardware wallet like a Trezor, Ledger Nano, or KeepKey. So it was a lot easier to get Bitcoins, and it was a lot easier to lose them as well. You have some Bitcoin sitting on a Windows computer. It's not hard for a hacker to find that and get access to it. All those exchanges from those days, they're all gone. That kind of thing. So, that kind of thing. People were created ways people could spend Bitcoins. And then you see someone paid 10,000 Bitcoins for 2 Papa John's pizzas.
Right. And I think it was a teenager who actually accepted those Bitcoins.
Yeah, and at the time, they're like, hey, I just had the computer work overnight and I got free pizza. That's great. That kind of thing. But I like the idea of the computer working, right? You're buying a machine. You want it to be working for you. You say, oh, wow, this thing has this, 8 cores that has all this processing power. It can do all sorts of calculations. It could do, millions, billions of times math problems faster than you can. And then most of the time, the computer's just sitting there. CPU utilization at, 2%. Well, why shouldn't it be doing something productive all the time for your benefit? I just like that idea. You want to think, oh, wow, the computer is doing something useful while I'm sleeping.
Absolutely.
And when people spend a lot of effort and the search for aliens, nothing so far. There's been some other interesting projects like protein folding, and now there's mining, although you have this evolution from CPU to GPU and FPGA to then the modern ASICs, where you have these specific machines that can only do Bitcoin mining. But as it worked out, even though we've had these orders of increases in magnitude of hashing power, the system actually has been stable. At the ASICs level, things are good. There was certainly a risk that in the early days, the first person to come up with ASICs could overpower the network.
Right.
But they didn't. So it's actually good that the rate of progress has slowed down a little bit, and that things were able to unfold the way they did.
Mm-hmm. So in 2010, well, to preface the show a little bit here, can you just tell us, in your opinion, what is Bitcoin?
I think Bitcoin is many things at the same time, not to use the cliched example of blind people feeling an elephant. And I'm actually writing something about that now. That for some people, Bitcoin could just be an investment. For some people, Bitcoin could be an economics experiment. Other people see it as more open source software and part of that movement. Some people see it in like an ideological thing of they have their own non-confiscatable funds, and other people might see it as like a community, something to belong to, and other people might just see it as something to help them learn computer programming or get into more tech, or something to get a interesting job in a growing field.
Got it.
I see it as all those things.
And how has Bitcoin mining changed since 2010, and what value does mining contribute to the network?
Well, yeah. So as I was saying, there's been this evolution. In the early days, it was hobbyists who were not concerned about the immediate financial value. Particularly early on, there wasn't any financial value. And even with GPUs, a lot of people already had GPU systems for running video games. So they're like, oh, well, I'll just do that instead of the video games, or you run it when they're not playing the video games. And now you have a lot more, even though you have hobbyist miners, you have a lot more people who are mining on an industrial scale, that it's a business, they have a corporation, they are trying to make sure that they're profitable, they're locating the places where they can find cheap electricity, good access to mining equipment, and lower labor costs. So it's definitely different how that's evolved. The mining is very important because the proof of work is what gives Bitcoin its security. It needs to have security because it's all public, it's all out there. So there's an opportunity for anybody to try to attack Bitcoin. It's not hiding, it's not behind some kind of firewall, it's not in some building that only some people have access to. Anyone can access the blockchain, and they can try to publish transactions, they can do their own mining, and it relies on the consensus rules of the system, it relies on the algorithms involved to keep it secure. So if you don't have that much mining power, it becomes easy for some attacker to overpower the system by getting a majority of the hashing power on the network. Right now, Bitcoin is the most secure by far compared to the other coins in which they're mining, proof of work has held up well over the last 10 years. Even though, there have been attempts at attacks, and there certainly will be in the future, but the cost of attacking the network has gone up dramatically. So when you have, 1,000 people mining with CPUs around the world, the costs of attacking the network are relatively low. And right now, where you have these industrial scale mining operations, the cost of the network, attacking the network, you can calculate, is going into the millions, billions of dollars, which means that you can actually store value on it and have more confidence in it. You can't really make it more efficient. There's people trying to figure out ways you could do something else like proof of stake. Those have not been tested in a decentralized way yet. So I appreciate that the mining is very clever. You're tricking people into securing the network by giving them a financial incentive to do so. And the financial incentive is the token of the network itself. The miners get paid in Bitcoin for securing the Bitcoin network, for validating the transactions.
Okay, and blocks of transactions are validated on the blockchain network through consensus, but people say Bitcoin is decentralized. Who's really running the show?
There isn't any particular person or company or area or government in charge, which is part of what makes it work quite well. However, Bitcoin wouldn't have come as far as it has if you didn't have a lot of very talented people. Certainly, Satoshi Nakamoto got it started, but he was also drawing on the work of a lot of other talented people, Stuart Haber and Wei Dai and Adam Back and Nick Szabo and so on. And then, Gavin Andreessen was helping lead development of the project for a while. Now you have different developers leading. But the nice thing is that people can just add their own code. They can try to make their own protocol. They can propose changes to the rules. They can decide whether they want to mine or not, whether they want to run a node or not, whether they want to invest or not, or make transactions. And what we've seen with some recent forks and some other excitement in 2016, 2017 is that it's not that the miners are in control or the developers are in control or the community is in control. All these different stakeholders, including heavy long-term investors and Wall Street and so on, they all do have a little bit of say. So there's different parties, and they might approach it from different angles. Some people just want to make money. Other people may be more ideological. But it turns out that there is a system, even if it looks a little bit chaotic. There's an assumption that things have to be ordered from the top down. That in parts of the U.S. there's traffic lights, and then it's like, well, what happens if the traffic light goes out? How will people know how to get through the intersection? But there's places in the world you can go where there are intersections. There are no lights. There are no signs. People figure it out.
Yeah. Well, before we get into trading and investing, let's expand a little bit on the mining side of things, because mining is really the backbone of the Bitcoin network. It provides security for the transactions and ensures that the network won't be successfully attacked and will remain functional. Are you still mining right now?
No, I'm not mining right now because I don't have any relative advantage. I don't have access to low-cost electricity. Mm-hmm. Also, mining is quite competitive because other people have sought out unique locations like near hydroelectric power plants in remote areas where that electricity might not be utilized otherwise, or they're buying large numbers of ASICs in bulk from manufacturers, that kind of thing, and getting a better deal. Right. As well as the fact that even in periods where the price has been going down, the total hashing power of the network has been going up. So if you look at, for example, 2014, during 2014, the price of Bitcoin went down. I don't have the numbers in front of me, but approximately 70%. But the hashing power of the network went up by a factor of 30. So in theory, the hashing power would be following the price down. Why would people invest so much in hashing power if the price is declining? The difficulty is going up, which means that they're getting less and less Bitcoins. And the halving approaches anyway. Right?
Yeah, exactly.
So it doesn't seem to make sense, and it's possible that there is some degree of irrationality there, that some people just want to mine because they want the Bitcoins to be doled out to them slowly, so they don't feel like they're getting in at a specific price, that they're accumulating over a period of time, or it works out better for them for some reason to be able to mine as well. Or in certain cases, maybe someone has a warehouse where they're already paying for electricity in the contract, but because of what they're doing, such as importing clothing, they're not using much electricity. So they have an advantage there as well.
Right, to just use or take advantage of unused resources that they're already paying for. It seems like the mining side of things is really dominated by the larger institutions. So can you just touch on what are mining pools?
So with mining, the idea is that if you're mining, you are taking the recent transactions and then you're assembling a block of the valid transactions that are being propagated between the nodes, and then you're building on top of the previous blocks in the blockchain, and then you do a hash of the of your new block, and you need to get basically you're adding a random number to it, and then you need to get a hash of that. The hash has to be within a certain value, so you're essentially getting a random number. The random number needs to be within a certain target. The higher the difficulty, the smaller the target gets. So with the industrial scale mining, it's really increased the difficulty, which means the target gets smaller, which means that it becomes much more difficult. Now even trillions of hashes per second isn't quite so much.
Mm-hmm. And I guess moving away from mining because of, it's so, like you said, so competitive now, and these large mining pools are really making it more difficult for just one person, say you or I, to get into that industry. What are the things about crypto or Bitcoin that you would most like to change, or you'd most like to see change in the coming 12 months?
Well, what I would like to see is better user interfaces for Bitcoin wallets and so on. I'd love to see the hardware wallets design incorporated into cell phones and into regular computers. The fact that you can now have this digital bearer instrument exposes just how bad computer security has been for many years. I would definitely like to see more people recognize the importance of decentralization, the importance of privacy, the being able to clearly distinguish between the really exciting, legitimate projects in the space, the well-established entities like Bitcoin in the space, and things that are total scams or really a serious distraction or causing more trouble than the value they're providing in the space. I'm not sure if those things are going to happen. That's just a wish list,
right?
But there are good developments that look like they're on track, such as the backed BAKKT,
ETF.
grade industrial grade storage, right? potential ETF proposals that you assume one of them will get approved sooner or later. Given that there's ETFs that are holding gold, ETFs that are, triple short leverage on financial stocks and all sorts of other things. For people who want to be involved as an investment, that's very likely to be a better solution for them than to try to hold the coins directly, especially if they have trouble with the idea of private keys and learning new things. And, that stuff like that, like an ETF, lets the investment fit in with the rest of their portfolio for the same reason that someone who's invested in some stocks and bonds doesn't necessarily want gold bars in their house.
Right. Do you see those shortcomings as the big sort of obstacle that is keeping a lot of the institutional money, a lot of the fund managers from entering the market right now, or in general?
That's what I've heard from people, that there's while there are some funds, there are some institutions that are already in, there's plenty more that need certain structures to be created for them to get in. And then there's more than that not only they need that, but they need to see everyone else doing it before they feel safe. There's a saying like, oh, nobody ever got fired for choosing IBM. And then, that saying was when IBM was the default choice. So, if you recommend some vendor that nobody's heard of, and if it works out, great. If it doesn't work out, then, you take the blame for that. Bitcoin went from, nobody heard of it and experimental to, okay, this is new and exciting. And then you get to the point where all these institutions want to get in because they see other institutions are in, aside from them saying, well, is this a asset that's, non-correlated with the existing portfolio and has been outperforming so far.
So these large institutions are still governed by FOMO in some way.
Yeah, but also with a lot of them, there's specific rules. So, for example, there might be funds that it says, oh, they can only buy investment grade bonds, so they couldn't buy a high yield junk bond if they wanted to. And the same kind of thing where there's funds that it's structured that says they can only buy stocks that are listed on the New York Stock Exchange, for example, or New York Stock Exchange and NASDAQ. So they can't just say, oh, well, we're going to take some of the funds and put it into a Bitcoin ATM. We're going to take some of the funds and, open a Coinbase account, because that violates the existing charter.
Right.
But then once someone creates an ETF, exchange traded fund, that's a stock, they'll be listed New York Stock Exchange, NASDAQ, and so on, and then they can just say, oh, okay, great, that fits in with what we can do, now we can buy it. One of the biggest drivers of price so far has been how easy is a coin to buy. So, 2010 you could mine Bitcoins, but if you wanted to buy them, wasn't
not so easy.
Clear exactly how you might do that. Now there's lots of options. There's all sorts of different ways, and you might see that, oh wait, the price is higher. That's the consequence. I had said to people back in the day, they asked me for stock tips, and I said, well, there's Bitcoin, and they said, well, what's the stock symbol? I'm like, it doesn't have a stock symbol. It doesn't have a ticker. But by the time it does, I expect the price will be higher. So you have that trade-off. You have to do a little bit more work to get some of the reward. Not that much work, but it's definitely there.
Yeah, we like to do price predictions on this show, so if you will indulge us, I would love to know, what's your price prediction for Bitcoin in both the short term and the long term?
Okay, sure. Well, I'll say this. First off, I expect the volatility to increase again. It's been pretty bizarre that over the last matter of weeks, Bitcoin has been more stable than Tether, a supposed stable coin. People are now getting excited. Bitcoin is up 2% on the day, when it's had plenty of times where it's moved 5 to 10% plus on the day for no particular reason. I certainly think that there's a huge opportunity for growth. Right, we're at $100 trillion for all Bitcoin in circulation, and in the modern world, that's not that much. If someone says, would you rather have 1% of all Bitcoin in circulation or 1% equity stake in Uber, which is valued over 100 billion, I think Bitcoin would probably be the better choice. There's more room for it to grow, but there's a limit to the scale. So I think that you have this ongoing cycle, quiet period, followed by slow increase, followed by parabolic run, followed by crash and oscillation, and then that goes back into the quiet period. So we're in the quiet period right now. I think that it's due for the slow uptick, possibly another parabolic run, which could, again, it overshoots, where it should be, right? So Bitcoin progress continues to be made, code continues to be written, new people continue to come in, but it's very easy for the price to get far ahead of adoption, code quality as well as mining and so on. So I think we could have another parabolic run that will take us above 100,000 with a crash back down into the $20,000 to $50,000 area. And of course, people will say, "Oh, Bitcoin crashes to $30,000. Is Bitcoin dead?" But that's just part of the cycle,
right?
That's what they said now. That Nouriel Roubini said, "Oh, Bitcoin has crashed to $6,000," and there's a tweet from him in 2013 saying, "Bitcoin has crashed to $58."
Yeah.
So most people would be happy to have crashes that take them to 100 times the level from a few years ago.
Right. So is that your short-term prediction, or long-term you seem pretty bullish?
I would certainly like that to happen in the next few months, but it's entirely possible that we don't have the next major parabolic run until 2020, when the next halving is likely to happen. But I think there's room for Bitcoin to be worth in the low single-digit trillion dollars. So that gives it room to be 10, 20, 30 times higher in value. But I don't see certain levels as being really possible or sustainable without far more work being done, or just not really even possible at all. People like to say things like, "Oh, what about $1 million Bitcoin?" Like, yeah, well, that implies that all the Bitcoin in circulation is worth more than all the gold and all the stocks. It doesn't quite sound right.
Yeah.
Unless there was some event that took out a lot of Bitcoin permanently out of circulation.
Right.
Somehow someone locks 15 million of them in 200-year time lock contract or something very unusual.
Yeah, I think there's already enough scarcity around Bitcoin. Most people haven't even realized how scarce it actually is. Do you think
all the millionaires can't have one? Everybody on Coinbase can't have one. If any one country says, we're going to use Bitcoin as their primary currency, it'll create an incredible amount of demand. We'll push the price a lot higher than we are.
Yeah, you mentioned 100 million total market cap for Bitcoin. Do you think this is going to be moving forward over the next decade? Is this going to be a take most game or a take all game for Bitcoin compared to the alts?
Well, I think that there's a lot of altcoins that are severely overvalued and then don't have a particular reason to exist other than perhaps it's entertaining for some people to day trade them. With the volatility, the more unsound something is, the more volatility it has. The more volatility it has, the more fun it can be for somebody trading, day trading with leverage. Also, the smaller an asset is, the more vulnerable it is to hype and fear, and that's ultimately not a good thing. But it makes it, and creates an opportunity for people to try to talk things up to promote them as well, and just creates these little cycles of prices going up and down. However, that being said, Bitcoin, while Bitcoin is going to take over some of these other responsibilities with second layers and other options, Bitcoin can't do everything. So certainly there are things that are truly different, that make different trade-offs, that have their own innovation, that can't be adopted into Bitcoin, and those could take a lot of value. Something that's extremely privacy focused like Monero, where everything is private by default, but there's a cost for that in terms of processing overhead. And then there's also stable coins. Bitcoin, while after it becomes more of a known entity, it's not going to have the wild volatility it had in 2011, 2013, and so on. It's never going to be fixed to the dollar. So some of these stable coins could potentially have larger market caps than Bitcoin once those get integrated into regular systems.
And what are you working on right now behind the scenes?
I'm advising some startups. One of them is trying to set up a crypto-focused hedge fund. One of them is Intercoin, which is in the process of trying to create a global coin that would allow communities to create their own coins off of it. I'm also working on trying to put together materials to educate people more about Bitcoin and blockchain. Run into that where, years ago, people would just say, "What's Bitcoin?" And now people say, "Oh yeah, I've heard about Bitcoin." And then I say, "Okay, what can you tell me about it?" And that's often the limits of it. So, or blockchain, wanted to get people away from just using things as a buzzword and saying like, okay, what businesses can this really help with, and where can it not help? Where is just a database more of an appropriate solution? So I've done that with some talks, getting people to go from almost no understanding to a decent understanding of what's happened so far, what is likely to happen in the future, and an idea of why the principles are important and what the distinguishing characteristics are.
That's great. Yeah, I think it's very much needed in the marketplace right now. More education and more availability of information to the masses who have heard about Bitcoin. They've seen it in the news, or their barber told them about it, or for whatever reason they know what they've heard of Bitcoin, but they don't know what it is. They don't know how to use it. They don't know how to invest, if they're even interested in investing. And it's people like you who are going to help the masses to adopt the technology and move forward on the adoption curve.
Right. And it's very important for me to be, a good actor in the space. There's plenty of people who want to just promote something that, they just invented, and then they, make some money from it and then move on to the next project.
Are you
or
talking
telling
about
people,
Roger Ver? Or?
I don't want to, criticize anyone specifically, but certainly a lot of people, they did, good work promoting things, and then they realized, oh wait, I can make even more money if I, promote something that I can just print more of, and then eventually, that stops working, and then you just change the name and do something else.
Mm-hmm.
So the other thing is people need to understand the importance of finding an appropriate level of investment. So for some people, if they really don't understand computers at all, if they are very risk averse and they're on an extremely limited budget, they shouldn't really buy any Bitcoins directly at this point. It wouldn't make sense for them to say, oh yeah, let me put some Bitcoins on my cell phone. Although, they may want to consider it as a subway, with an ETF, or look at an existing fund like the Bitcoin Investment Trust trading under stock symbol GBTC. The premium has come down. It was at absurd levels. Now it's fairly reasonable. But then for other people, it might be a matter of, okay, yeah, it would make sense for them to buy some Bitcoin, but they need to actually figure out what is an appropriate allocation. They think, okay, well, if this is likely to go up, by 10x or, 20x in a few years, they think, well, then the more the merrier, right? Shouldn't I put 100% allocation, take out loans, and buy even more? And they don't understand that if the person over allocates to Bitcoin, then one, they're getting more volatility. Two, they have a risk of being shaken out. So what if the price takes a dump, or what if the price stagnates for a period of time, and then they're forced to sell out of positions before it takes off.
Yeah, I think that put the majority of people who bought up during this last bull run, that put them on the losing side here during this consolidation period.
Yeah, if they didn't invest so much, then they would still have more to buy when the prices came to lower levels. If they didn't invest so much, then they wouldn't be, more likely to panic and sell on a dip. And if they invest too much, then it becomes a preoccupation. And most people have day jobs, and they're guaranteed to make money at their day jobs. They just need to show up. So it's a different thing with investing, where yes, you can make money, you can also lose money. Those are both possibilities.
Yeah, total mindset switch there from employee to investor. Well, thank you, Daniel, for hopping on today. To close things out here, do you have any last words for our listeners, and where can they go to learn more about what you have going on?
I'm in the process of setting up a website and being more active on social media. But right now, you can see some of my articles on Medium if you search for my name, Daniel Ameli. And remember to keep learning, be educated, do the due diligence, do your own research. All statements about the future are inherently speculative. But right now, Bitcoin is exciting. Eventually, it will be boring. Now's the time to do it.
Well, I appreciate the words of advice, as do our listeners. Thank you guys for listening, and we'll see you next week on Barstool Bitcoin.